Good afternoon. This is Dennis Wilborn from the Active Trend Traders. And joining me this afternoon is David Grandy from All About Trends. There'll be a slide at the very end that provides information on how to contact either David or myself. And so David, what do you think about this crazy market? Fun times, huh?
It was a really interesting market. A lot of things happened this week that we'll get into. A lot of fun things.
Yeah, you know, I was some of the words I was thinking about for defining and describing this market were scared, weak, volatile, but also profitable and accelerating. For the right trade, some of this week was just absolutely phenomenal. And I'll cover a couple of the trades that I did that were based off some of the recommendations that I got from All About Trends. So let's move forward. A reminder that all materials presented here are for training purposes only, and that we make no recommendations, suggestions. We both follow systems that are proven performers, but just because they've been proven to act well in the past in all market conditions, there are times when we keep our powder dry, and this may be one of those times. Keep your powder dry and wait for the proper setups. I wanted to share this with you. I've revised one of my slides, but it's basically, it talks about the pillars of a great system, what to trade, when to enter and exit, what strategy to use, and what to expect. This was a pillar that I added this week because as I was doing some writing, I said, you know, there's more than just the four, because you have to know what to expect in order to plan your trades out properly, and when you do that, you wind up with a great system. And the active trend trading system is divided to where we focus on both income generating trades and also capital growth trades. And over the last few weeks, we've been primarily David will answer that question in just a bit. I will refer that to David. But anyway, about with the you grow from a system into a campaign. And like any campaign, whether it is a political campaign or a battle-type campaign, you have to know where the battle lines are drawn, and then also what actions you're going to take at certain lines of demarcation. And David, we got two Davids on the line, well, three Davids actually, David Grandy, David True, and David Fega. And I'll pass on to you, David Grandy. David Fega has a question about his subscription. He did a trial, but I will pass that information so you can follow up with him later, okay?
Okay, no problem.
Okay. So anyway, I came up with this little diagram here because basically our systems are based on a foundation of study, knowledge, experience, the 5 pillars to grow into the system, and then basically the strategies that come off of those, or the campaign that one endeavors to take care of with their trading system. So I'll come back to that slide. Let's take a real quick look at the markets, guys. And we'll start with the S&P. I've got both the daily on the left-hand side, the weekly chart on the right-hand side. The S&P, again, was stronger than either the NASDAQ and or the Russell. However, we are starting to see some breakdown here. And look where the S&P gets to. We get a hanging man candle here on Thursday, and a confirmation of that, but we stopped just short of breaking through the 50-day moving average, and that seems to be, that's a line of demarcation that will tell us if that fails, then where's the next logical place for the market to go? Down here to wherever the 100-day will be moving at the time, and or this upward trending trend channel line. One of the things that I wanted to show everybody also was that if looking at the market right now, excuse me, right now, it seems to be that it's a Wednesday to Wednesday kind of market. In other words, every Wednesday over the last couple of weeks, Tuesday or Wednesday, we get a bounce. And so one of the ways, I'll show you this neat little trick down here on the stochastics. If you just take your stochastics or whatever, if you're using an indicator like that, and there's that signal again. There we go. And just draw a straight line. Just follow the straight line down from here down to here, and where it's approximately the same angle. It'll give you an idea of approximately where you can anticipate the stochastics moving back into the oversold condition. And it's not a guarantee that, oh yeah, and then it's going to immediately turn around and bounce back up. But it'll give you some indication of expectations of how much additional downside could we expect. And as it turns out, this straight line coincides with next Tuesday/Wednesday time frame. And as you can see, in the past, it has not spent a lot of time down in these areas and would get a bounce or a double bottom and then a bounce. And so something just to keep in mind, and I don't know if you use that when you do your technical analysis, but it's just something to keep in your hip pocket. So as I said, the S&P stronger, but finding support at the 50. If that 50 fails, then we can expect further downside. The picture isn't quite as nice on the NASDAQ Composite, because NASDAQ Composite didn't even make it back to the 50. It made it back to the 100, reversed off of that, and continued to fall today. Looks like it has some additional downside momentum. And again, extending this stochastics down shows that it should be in the oversold condition about Tuesday or Wednesday of next week. Then what I would be looking for is not to buy it when it got down there, but I'd be looking for some of the small body candles to tell me, sellers are taking a break, or the buyers going to step back in. And one thing David and I was talking about earlier was that, with this current market being kind of headline driven, with the Ukraine, with stocks getting great earnings reports and then getting slapped silly, as we saw several times this past week, that when we're trading a market like this, it's very critical to modify and adjust our expectations. Don't expect a 20% gain right out of the block like you would have in a long-term uptrend, but a 5, 10, and sometimes even 15% gains can happen, but they happen very, very quickly. Or one can wait for right now, since we are in a downtrend and in correction, you can just wait for the downside trades, which also work out very well. Last but not least, I'm going to cover the Russell. I left on the chart from last week, if you remember, I had drawn this, what I call the magic fib box, that highlights the 38% retracement down to the 62% retracement, or up to the 62% retracement in this case, because I was measuring from the high to the low. And the action this week is very interesting in the Russell. It came right up into the 50% range, and it failed at the 50% range and is now falling back out of the bottom of the magic fib box, just about closed below the 20+% retracement, and it appears as if it too may get back down into the 1100 level to retest. And so Looking for next week. Right now, the knives are falling again, so I'm not stepping in the way of any falling knives. And if you were looking for a shorting opportunity, it happened on Wednesday and Thursday of this week. The signals were there, but now it's basically we're back in no man's land with nothing to do until we see where we're going to bounce again. So that's what I've got for the market. I've got a couple things to cover a little bit later, David, but I know you've got some great charts for us to look at.
Okay, thanks a lot, Dennis. That was well done. In fact, you took the words right out of my mouth on lowering expectations. I was just going to talk about that last pillar that you had there, that right now it was an interesting week. We went from possibly confirming a new rally as early as Wednesday or Thursday to ending the week, at the low of the week. And it's right now it's kind of a no man's land. We could have easily seen Tesla and Palo Alto Networks and Facebook all pop back above the 50 days and start building right sides of new bases this week as the market is making a new high or a new rally attempt. It's confirming a new rally attempt. That could have easily happened. But it didn't happen, so it's too hard to tell if they are indeed building bases here, or if the market has topped and leading stocks have topped and they're now going to be in prolonged downtrends. But the good news is that every week that goes by where we're kind of in no man's land, we get that much closer to a point where it's going to be very clear what we're going to be doing here and be able to put a lot of capital at work in the market, either on the long side or the short side. So that's the good news is that the market will eventually be there for us. But, as I look at last week or this week, last week's bounce was just a holiday bounce, really. I mean, light volume. The Nasdaq's back to its trend to closing at the weekly lows. We saw a lot of companies report great earnings: Gilead, Facebook, Synaptics. They had nice pops. Well, actually, Gilead didn't even pop. I mean, they blew out earnings. And they halted it. You think that stock would be up a lot of points, and it was nothing. So that's telling me that we have a very weak market still, and institutions are, they've been accumulating large positions over the course of the past couple of years in these stocks, and they can't just get out of them right away. But anytime they get an opportunity like an earnings pop, they're taking it to lighten up their positions. That's definitely clear. That's definitely the trend right now, and that's something that's could present some good, real short-term trades for us. Is shorting earnings pops here if as long as that trend continues. But I'm not going to go out and put a lot of capital at work right now. There are some setups, but there's not a whole lot of headway, whether they're long or short, regardless of the quality of the setup. So like Dennis was saying, your expectations need to be lowered right now. Your stop losses need to be tighter, and your profit expectations need to be a little bit lower than normal. So if, we're kind of, I don't want to sound like a broken record, but I feel like what I've been saying the last few weeks is still the way to be right now. If you're a experienced trader, there's setups out there, there's opportunities. If you're more of a beginner or you have a smaller account balance, the best spot to be right now is cash, knowing that there's going to be some good times coming up and chances to put some good money at work where the odds are really stacked in your favor. Right now it's 50-50, and I don't like 50-50 odds. So if I like 50-50 odds, I do more sports betting than stocks. But anyway, I do stocks. Okay, so let's just take a look quickly at the NASDAQ. We talked about this a few weeks ago, the trend on the way up where we had a week down, then followed by a week up, and then a week down, followed by a week up. And that trend got broken about 6 weeks ago where we had a week down and then followed by another week down. And with that came the trend of closing at the low or near the low for the week. You can see we've done that 6 of the last 7 weeks. The only week we didn't was a light volume holiday week. So I don't see any strength here. I don't see any reason to go out and get excited on the long side. Even if we had followed through this week, I mean, what are you going to go out and buy? And do you really feel comfortable putting your hard-earned capital at work when you see the, this clear change in trend. S&P, there's a lot of talk about head and shoulders tops. There's people talking about head and shoulder top on the NASDAQ as well. You know, I'm not a real big, you know, proponent of that. We were there back in August of 2011 where we had a head and shoulder top on the S&P, and, you know, we got another 2.5 years to the upside. So, you know, for me, it's just all about what's happened in the leading stocks and, you know, where are the quality breakouts, where are our stocks being rewarded for good performance. We're just not seeing it right now. So sellers are totally in control of this market. The thing that's difficult about it is they're not really giving us time to have short sell setups form. You know, they're not letting stocks rally more than 3 or 4 days, and they're not making it all the way to resistance areas where it's a lot safer to short sell. So it's, you know, it's a very difficult market right now. But there are patterns out there. We've talked about the pullback off highs pattern. This is your pattern for buying uptrends, looking for stocks in confirmed uptrends above the 50-day moving average. They've pulled back in orderly manners. We talked about Zulily. This is how it looked a couple weeks ago. It did pull back below the 50-day, but it just pulled back to a prior breakout area, and then it did trigger. But as you can see, you only got so far with it, and now the pattern's blown up. So again, if you're going to take these trades, you know, you have to have a very small profit goal and be able to lock them down, you know, 5%, 10%, and, you know, be grateful for that. And that's really what's out there right now. Downtrends, opposite of pullback off highs, we're looking for stocks that have broken through support, are now on confirmed downtrends, have rallied back to areas of resistance. We talked about Palo Alto Networks. This is how it looked last Friday when we did the webinar. And it triggered yesterday, but once again, very little follow through. I mean, when we're in a market where the bear market's more defined and stocks are in more confirmed downtrends, when this breaks, it breaks hard, and it's going to go. It could easily go down to this blue line in the first day or second day, and there's just not a lot of conviction one way or the other. Like I said, we can't tell right now if this is a true top and this is the start of a long-term downtrend, or if this is just the left side and now maybe the beginning of the bottom of a cup. So the jury's still up on that one. If you buy traditional breakouts, there was one this week from the IBD 50, Synaptics, and that felt good for about a couple minutes this morning, and then boom, right back down, and now you're looking at dealing with you know, getting stopped out. So you know, they had great numbers, and institutions are just looking for reasons to sell. And look at the volume here too. I mean, that's you know, that's pretty clear that that stock's not going to go anywhere for a while. Facebook, again, we talked about earnings. Gaps ups are being sold into. We had a gap up and then boom, back down. Netflix, same thing, gapped up on earnings and straight down the rest of the week. Back to, well, looks like it had a new, it closed at a new low this week. So now there's been some talk about GasLog. IBD did a webinar yesterday where Bill O'Neill said that he was buying this stock. He bought it a few weeks ago. You know, it's a great story. It's a great stock, and it's got tremendous earnings growth and sales growth. Stocks like these don't come along, you know, every day. So when you see stocks like this, you know, you want to pay attention to it and you want to take a look at it. And O'Neill's saying the reason I got into it without buying it off a traditional IBD base is because sometimes, you know, when it's obvious that you've got a good stock here, you know, strong earnings growth, strong sales growth, the stock is acting very, very well, lots of accumulation, little if any distribution in it, you know, you just have to sometimes step up and buy it, and that's what he did. Now, am I going to go buy it here? I mean, you can see here is a mini double top here. Is that necessarily going to mean that GasLog's going to roll over here and crash? Probably not. But it is a short-term resistance area, and it's likely it's going to probably pull back here. It's because the indexes are starting to pull back again too. So if you want to buy this stock, I mean, the ideal spot to buy it would be on the pullback to the green trend channel line here. You also have support at the 50-day and the 10-week. So you've got a couple areas of support there. And I like buying things where there's multiple areas of support, not just one, and then hoping that that one sticks. If you want to, now this stock has been very, very strong, so it may not pull back all the way to the trend channel right now. Just depends on what happened in the indexes. So you could take a shot at buying it here at the recent low, which would be the low 26 range. So that's what I would recommend if you really want to get into GasLog here. Again, it's hard to ignore good stocks like this that come along, and the market correction has had zero impact on it thus far. It just keeps on trucking. So that's just what we call strength and the potential of a real big winner here. So what am I doing now? Again, just what I talked about at the beginning. I'm just waiting for the pins to get set up a little bit better, where it's more clear which direction the market's going and leading stocks are going, and then the setups are more abundant. In other words, I don't have to go out and work really hard to find one or two setups where all I have to do is open up my computer, look at some stocks, and boom, I've got 10 good quality setups. That's the kind of market I'm waiting for. So I'm just hanging out still. It's a good opportunity to review your past trades, build your watch list, read some books, go on vacation. I played some golf this week. I'm probably going to play some golf next week. I'm excited about getting my golf game back in shape because I think we're probably a good couple months away, honestly, until we see a real market where we can put some real capital at work. So that's my advice to you, and I think that's all I have.
David, thanks a lot. And I really like the, I know you guys came out with an alert on Palo Alto Networks this past week, and I actually was able to trade that. I shared it with the group. I think I put the trade on about Thursday of last week when the alert came out, and I just really, but it was one of those situations where I did a bear put spread, and based on it falling back down, and I'm going to switch over to the screens to show a couple of stocks to folks that will reiterate some of the things that you said. But right now, my time frame for trades is very small, if you would.
Right.
Here's and here is Palo Alto Networks, and what I'm finding is that the moving averages, acting as both support and resistance, are working really well. And so when I analyze a particular stock and or a potential move, I always like to know, okay, how far is it from where I would want to get in to the target moving average where I think it's going to go. And so last week, last Thursday, you guys came out with a notice on Palo Alto Networks, and here was last Thursday, and my pencil's right over it right now, and it went on up to Tuesday of this week, and so I jumped on a weekly bull put spread that was basically right here up about 71, and I bought the, it was a debit spread. I bought the 70 by 65, and I had to pay about $1.80 for it. And I just put a conditional order in saying, okay, if I get to 85, or 65, excuse me, if I get to 65, go ahead and sell it. And it resulted in a nice little profit, made about 70% on the what was invested. And as you can see, but look what happens. It gets right down to the 100-day moving average, which actually coincided with the 65. But it had to be a trade that I had to put in as a conditional order in order to take advantage of it, so that it would happen whether I was there, because I don't like to sit around and just watch the computer screen and the stock screen. So I wanted to cover just a couple. You had mentioned Gilead, Netflix, Facebook, and just taking a real quick, what gave me reason for concern on several of these that had okay earnings was where they were gapping up to in earnings. Where were they gapping in almost every case? They were gapping up into an area of resistance, and you can see with Netflix, this was one heck of a sell-off, and I think you mentioned, and I'm going to be focusing next week also on more of these earning pops, because this turned out to be a wonderful setup the next day for a short trade. And let me turn my volume down. I turned my volume up accidentally. But as you can see, it popped right up into this level, this support, or correction, resistant zone, and then reversed off of that. Same is true on, now Gilead has held up a little bit better in that it did sell off, but what course sells off to? Right to the 8-day moving average and does a bounce. Facebook, I don't know if anybody likes Facebook. I mean, but Facebook, look at this. I mean, just a beautiful, moves right up after earnings, moves into earnings, and then puts in a bearish, puts in a bearish engulfing pattern, followed up by another bearish engulfing pattern, and followed up with the downside today. And I wanted to highlight this as everybody is looking for that reversal point. When's the market going to actually reverse? Is as you're doing your analysis over the weekend, typically support and resistance are not, in fact, just a line in the sand, but they're actual zones. And oftentimes, and I saw on some of the charts, you guys had drawn a line across the bottoms here. Is that where it's going to reverse and pop back up? But as you go back and look over here on the weekly chart, which I find very interesting, is this resistance zone, correction, support zone on Facebook actually goes back to last year, where we have this where it breaks out of its former pattern and continues up. And so oftentimes, if we get locked in on the shorter term, daily charts or long-term intraday charts, and we miss that, oh, look, on the weekly chart, oh yeah, there is a strong level of support there. So that would be a logical place to look for Facebook to flip back around. And another one of these zones that I just want to highlight to everybody is on TNA, my favorite ETF, TNA. Here's a support zone. It tested it last week, and it looks like it may in fact get down here and test again. So when does, this is part of the expectation thing, triggers and targets, when does TNA become interesting to me again? When it puts in a small body, or when I get back down into a known, proven support zone. Because as you said, we may be setting up for a head and shoulders type pattern, or it may blow out the bottom of it. But that's when it becomes interesting, and that's when one can put on the best high reward risk trades if they're looking to trade the stock. Because right now, I looked at 250 stocks today, and very few of them were showing any strength whatsoever. It was kind of in the vernacular, for a long position, the cupboards were bare. So with that, David, so I hope that adds to what you had said. Compliments?
Yeah, I think next week If that trend of earnings pops and drops continues, that's going to be that could be fun, and I would recommend doing that with options so your risk is minimized.
Yeah, and that's exactly what I do to the downside. I always I look for stocks that have good option change with good open interest, and to the downside, I primarily do trade the options.
Yeah.
So,
yeah,
hey,
I think that's where it's going to be for a little bit, because we're right in the middle of earnings season, and there's not a whole lot else, really concrete, setting up. So.
And one of the things I have done, David, on some of the stocks that I am interested in long term, like I like Qihu, Qihu long term, and Qihu also offers very rich weekly options. And so one of the things I've done with that is I bought it several weeks ago. But as it started to break down, I started doing protective type, positions on it with various, selling calls and buying puts as it was going down. And over the last month, I've actually done a lot of income generation with it, but I bought down my cost basis on Qihu from $106 to $87.
That's excellent.
And so that's about a 17% return on the initial investment, and now we'll see what happens from there. But like I said, that's a stock that I really like, and I would like to own it longer term. But I'll continue to pay down my, it's like buying that rental house. I'll continue to pay down my cost basis and also generate some real nice income generation every week on that because of how the weekly options the weekly options work. So with that, guys, I'm going to stop the recording here and see if there's any questions from anybody.